Hello friends, let us start today's analysis. Today actually I'm recording this video a little late, so I have uploaded up to 1st October. So I think 2nd October was holiday, yeah, it's Mahatma Gandhi Jayanti. So 3rd October, let us start the analysis. 3rd October was Thursday, and Thursday being Nifty's expiry. Let us see what happened. 2nd October, this was Virgin CPR, and sorry, 1st October, and 1st October also it remained Virgin CPR, so we can extend it here. Okay, for 3rd October. Now let's put this PDL and PDH here. PDH, PDL and Virgin CPR, these are three important levels, and this is a narrow CPR. Today is narrow CPR, on 3rd October it is narrow CPR. So this becomes narrow CPR usually is trending or zigzag day. Now on today, on 3rd October, the market opened gap down and a big it's a sizable gap down. So this was a PDL, market opened here and it immediately gave us a green candle, but it has a big wicks on top. So big wicks on top means price rejection, and it cannot be treated as bullish candle because there is a big wicks, it's as equal as the size of the body. So this can be treated as neutral candle. So there is no trade on the first candle, then no candle has broken the top of the first candle. This tiny candle is not breaking the previous wicks, so there is no breakout here. Now you have to observe carefully, it tried to reverse from here, but this cannot be treated as Virgin CPR reversal pattern because it is on the boundary. It should at least go till the center of the Virgin CPR and then for a better risk reward. So there is no entry, no reversal here. But if you see this candle, the 950 candle, okay, just mark the high, day's high. The first candle high also becomes the day's high because it remained high for most of the time, and that's how it can be treated. This candle has given a false breakout because when the candles closed above the high of the first candle, this candle reversed and this can be treated as false breakout. You can take a short entry here, keep your stop loss above the day's high or the candle high, and then twice the stop loss, twice the stop loss is your target. So somewhere here there is a target, or day's low is here. Now once this trade is done, the second trade will happen at the bottom of the first candle, because bottom of the first candle is very important support here, because from this point market went up. So you have to just draw a line. What happens here, we have to mark. If it reverses from here, it will be a green candle reversal pattern. If it breaks, then it's a green candle breakout pattern. But here it broke. This break is actually one can go short here, but usually I don't recommend because this is not a parabolic, but there are back to back two big red candles. So this is low probability for me, but such trades can be taken. So take a trade here, breakout trade, stop loss above the candle or above this turning point, and then twice the stop loss is your target is. So in such cases, what is our actually this trade you can continue. This is a false breakout trade. You can keep continuing till your days low till here, and then from here you can trail the stop loss, like put your stop loss here, then stop loss here, then stop loss here, then stop loss here, like that you can. I think your stop loss will hit somewhere here, so that's fine. Then after that there is another point wherein we can find 20 MA retracement trade but no candle came close to 20 MA, so there is no 20 MA retracement trade. Then it consolidated here. So I find there is one trade, this is the false breakout trade, and this can be treated as the green candle breakout trade. So these two trades only, and both the trades worked. And reversal trade, there was no reversal trade until the candle breaks and closes above this 20 MA. So as long as the market is below 20 MA, it should go in the same direction, it should fall only usually. So that's it. This is 3rd October analysis. We can continue for, yeah, let's continue for 4th October. 4th October is Friday, and again here this still remains a virgin CPR, but now it's more days. Like I told you, virgin CPR is virgin for 7 to 8 days. So now let us count. I think it's more than 7-8 days, so it is less likely act as a virgin CPR. When the candle comes to that level, we can decide. So this is the PDH for 3rd October. This is PDL. This is PDL. Okay, PDL was a consolidation zone. Then there is, I can't see, there is one more, yeah, level. This you can extend. This is a turning point, and this can be extended. So turning point can be extended. Okay, now let us start 4th October Friday's analysis. The first candle is a B grade candle, and it closed below the PDL. This is the bearish sign. In this case, we can go short, but not today. I'll tell you the reason why. The reason is CPR is wide. When the CPR is wide, it is less likely a trending day. It can be a reversal day or sideways day. So that's why there is no entry here. Even if you enter this, your stop loss here, kind of little big stop loss. So there is no entry on the first candle. Then if you see, this is a big reversal candle where there is no entry, because entering here, putting stop loss here is a big stop loss again. Then this candle, the top of the first candle high is not broken, and it's kind of reversed from here, but this cannot be treated as red candle reversal pattern, because red candle reversal pattern is a high probability only within the CPR. If this candle would have generated within the CPR and then closed below it, or it has broken the CPR, then this could have been a red candle reversal pattern. So there is no entry here. Then okay, first candle is red candle. When the market reaches the bottom of, like suppose this can be a W pattern, if this candle could have come here, but then this has gone to CPR. Then the CPR is broken by this candle, 1205 candle, but there is no entry, because if you enter this point, which is just below the turning point can act as a resistance. So there is immediate resistance. Even if this candle has broken that resistance, this is back to back candle, there is no consolidation, so there is no entry here. Even this candle has given the reversal or false breakout, like 12:15 candle. Even this candle 12:30 candle has given the false breakout reversal, but this is low probability. Although it worked, it will happen that low probability trades will work, but we should avoid taking low probability trades, because if you take the trade here, there is a CPR acts as a strong support or resistance. If this is above, this can, up to this level it can act support. So once this candle has also broken, yes, this has confirmed, this candle has confirmed 12:35 candle that it is going to go down, because it has broken the CPR from outside and this is reversed. But if you enter here, your stop loss is above the central pivot or above this candle or above this day's high, it will be a big stop loss. So there is no proper risk reward trade, so there is no trade here also. In the in other words, like suppose if you go here below, okay, this candle, this can be treated as W pattern. Okay, all the criterias are meeting for W pattern. The only issue is there will be a big risk reward is not good. Like suppose you enter here on this candle, W pattern is first candle should be red, it should go down and then it reversed. The same point when the market comes and gives the bullish sign, like here, you can go long. But if you go long here on this 105 candle, your stop loss will be here, stop loss will be big, and between twice the stop loss there is a CPR. So this is not our this is not fitting in our eligibility criteria. So there is no, this is not a W pattern here. Then rest part of the days market came this side, fine. So there is no trade after that. There, if you see properly, there is a trade here, there is a trade on this candle, but it is not in our criteria. So although it worked, it looks tempting, but this is how you have to control yourself. Although it worked, but sometimes you have to control yourself, taking the trades which may work and you have a strong intuition, but it is not fitting in your criteria. So that is how you can develop the discipline. So that's it for 4th October. Now let's see for 7th October. 7th October important levels are, we have this PDL, then we have PDH here. Let us mark this PDH. Okay, PDH is a big supply zone because market fell from this point and it broke the day's low also here. So this can be treated as supply zone. If the market comes to this level and gives a reversal sign or bearish sign, you can go short. Now as I have been telling, let's see on the daily time frame also. We are on 7th October. 7th October candle is this one. We'll be doing the analysis for 7th, and you see here's 4th October candle. Market in fact went till this point and exactly from this point it reversed. So if you look at this daily time frame chart, you will understand why the market reversed from this point exactly. It did not only reversed, it reversed and broke the day's low and it closed the lowest point of the day on 6th, and it reversed exactly from the 20 EMA, which is 25,500, around that point. So this is how you can make use of your daily time frame. Daily time frame will give you a good picture of and a confirmation on your trades, whether you should go for it or you should avoid. As I was telling you, till the market is very far from 20 EMA, it will try to come back to 20 EMA and then it may go up. But you have to watch here. If it breaks the 20 EMA, it can go down. Again, market trying to go till the 20 EMA. So this 20 EMA is very important on daily time frame. So let's go back. Let's see 7th October, what happened on Monday. the market CPR is kind of white CPR, so it can be reversal or sideways day usually. Now when you see this setup, see this first candle, there is no trade because it is doji candle or neutral candle, and it is within CPR. As long as any candle is within the CPR, however it may be bullish or bearish, there is no trade unless it comes out of CPR. The third candle came out of CPR and it properly breaks the low of first candle, second candle, and the CPR also. So you can go short here, but your stop loss will be above the day's high and appropriate stop loss will be above the central pivot. But you see, from this point till this point your stop loss is too big. So to avoid, actually this is a good setup for going short, but since the stop loss is too big, you have to do position sizing. So if usually if you are taking 4 to 6 lots, you just take 2 lots today or 1 lot. So that is how you have to minimize the risk. This is risk management. Now if you see from this point till this point, if you take double of that somewhere here, yeah, but the target has hit because these two candles were trying to, you have to read this is like a candle, this is a storytelling, you have to understand the story. These two candles were trying to sustain that level and they were fighting to break, but this candles could not survive when the third candle broke this level. So most of the people will go short here, they will keep their stop losses above and or days above. Okay, so if it reverses, then their stop loss can hit and the market can go up. But as long as the market goes in that direction, you have to just watch. Like, there are buyers, there are sellers. You don't have to take your stand. You have to watch who is strong and you have to just be on their side. You don't have to create your own side. That is how you have to learn and understand and analyze and you know you can it's kind of, it's not gambling, but this will come with your the confidence will generate on your everyday experiences with this analysis and watching these patterns daily on daily basis. Maybe sometimes you are wrong and you have to be wrong to understand that, okay, this, and whenever your stop loss hits, you have to take it gracefully. That's how this is the only way to be successful in trading. You, with the fluke, you may hit 10 out of 10 trades, but it is not long lasting. If you have to pursue this as a career or as a full-time trader, even a part-time trader, you need to understand all these aspects of the trading. So as soon as this candle broke the first candle low or first two candles low, and in my previous video recently I have told you, like, if the second candle breaks the first candle low or high, it is not a big deal or it's not a big move. But when the third candle breaks it, market usually goes in the same direction. So you can see, when you enter here, even if you have entered here with position sizing with less lots, you should exit exactly when twice your stop loss, it hits somewhere here, this point. That's it. And from this point market again reversed. Then there was no entry, market is in this direction, then you have to find another entry where it will be 20 EMA retracement. Now 20 EMA retracement means you have to find a place wherein there will be a red candle which will retrace from 20 EMA and there will be pivot or some strong support or resistance. So this is that candle, which is 1145 candle. Here this is the perfect setup for 20 EMA retracement, but still, although it worked, this is a low probability because today is a white CPR. Usually when there is a white CPR, 20 EMA retracement is a low probability trade. So but even if you have to take the trade, you have to take the trade here, take your stop loss above this candle or above this point, which is PDL, or above this swing high, and then twice the stop loss is your target. Somewhere here is the target. Other than this, even if you draw a line here, there is no proper breakout or reversal trade. Okay, this candle has broken the 20 EMA, but this is not the first time break. Here it broke, here it broke, but it reversed. So this is not a good setup, or this is not a position to go long. So that's it. I don't find any other trade here. So there we sums up 7th October analysis. Now let's find what happened today, which is 8th October. Let us mark PDL and PDH. PDH is here. Okay. Sorry. So, and I don't find any other important level here. Okay. Now 8th October, first candle opened and it has given a pattern called PPT, pivot pressure trade. So in this trade what happens, the first candle has to exit from the CPR, and this has given the perfect setup like that. But if you see, if you enter here and stop loss above this, and twice the stop loss is like there is a PDL in between, so this is less probability or poor risk reward trade. So this is, there is no trade on this. Then it reversed from here, again it came on the same point. So this is actually on this candle, it's a W pattern, but this is also a low probability trade, because if you take a stop loss here and you enter at this point, on your way to your target there is a CPR. So this is a low probability trade. On this candle, this is 945 candle. 945 candle has broken the first candle high, but it closed within the CPR, so there is no trade. As long as candle is within the CPR, there is no trade. When then you say 1005 candle, this has broken the CPR on downside. Now here you have to understand one point. Now suppose the market is one side of the CPR, like this is bottom of the CPR, and again it comes to the bottom of the CPR, then that is not a breakout. Breakout will be when this candle will go other side of the CPR, which is upside. Now already it is on the downside, so it may come this time or maybe another time, so that is not a breakout. Breakout means from one side to other side of the CPR market is going. So what is the actual breakout? Actual breakout is this candle, 1035 candle. But immediately you should know this is a low probability trade, because from here look, 1 2 3 4 5 6 candles back to back, this is a parabolic breakout. There has to be some consolidation, at least 1 or 2 candles, small consolidation before candle breaks the CPR. And then again this is a low probability, should not go long here. Although it worked, maybe if you have entered here and exited somewhere on top, that's fine, but this is low probability trade with your criterias. Then there is no trade here, then okay, then there is no trade, because already this has become low probability. Even if the day's high is broken by some candles, there I don't see any other trade. That's it. Okay, that's it guys. If suppose if there wouldn't have been this CPR today, like this is, just imagine this day CPR is down or top or somewhere else, or it's a narrow CPR, weak CPR, then entering on this point, this candle would have been a good trade, or even this candle, because you see you get a 1:2 risk reward, and second is this is a strong power candle, this has no wicks, this is such a strong candle, which is breaking the day's high. Actually the first candle is red candle and it is breaking that candle without any wicks. So they were like powerful buyers here, and they all have a stop loss below this candle. So that is how you see rest of part of the day all those buyers, they saved their stop loss, they fought for their stop loss not to hit. So this is how we have to identify. But with our setup we cannot take the trade because it was within the CPR. It might have worked, like with experience you say I know, I'm for sure this is going to go in this direction, but that is after, like suppose you continue trading for 5 years, and after that that taking that stand is fine, but initially up to 5 years of experience you should not break your discipline. That's it guys, thank you, bye bye, take care.